Welcome back to another update of Smart Stock Sam. If you are really interested to make money out of US stocks, do not forget to subscribe and tap bell icon, because on this channel I deliver timely updates before crowd arrives. Alright, here we go.
What if I told you there's a company that just reported a staggering, headline-shaking $4.8 billion loss? Yet, at the very same time, some of the most respected institutional players on Wall Street are calling it a financial fortress. It sounds like a paradox, doesn't it? But today, we are peeling back the curtain on Bitmine Immersion Technologies, ticker BMNR. This is a stock that is attempting to do for the Ethereum ecosystem exactly what Michael Saylor and MicroStrategy did for Bitcoin. If you've been looking at the surface-level data, you are seeing a disaster. But if you look at the architecture of the balance sheet, you're seeing a revolution. Today, we're breaking down BMNR versus market and what you may have missed. Because while the retail crowd is running for the exits, the smart money is looking at a very different set of numbers. To understand the reason, the market is so incredibly confused right now, we have to look past those scary, red ink headlines and dive straight into the actual books to see where the real value is hidden. On paper, if you're just glancing at a stock screener, the rearview mirror looks ugly. Really ugly. That $4.85 billion net loss has triggered automated selling algorithms and heavy retail panic. It looks like a company in freefall. But here is the signal in the noise that most people are missing. That massive loss isn't because they lost cash under the mattress. It is largely a lagging indicator driven by non-cash, GAAP accounting adjustments and the volatile swings of crypto valuation. In reality, BMNR is currently sitting on a colossal $11.4 billion asset base. Read that again. They aren't burning through their cash reserves to keep the lights on. They are aggressively converting every cent of available capital into a dominant reserve asset. They currently hold 4.24 million Ethereum. When you realize that they are accumulating the world's most used blockchain asset while the market punishes them for accounting losses, you start to see the massive disconnect between perception and reality. And this isn't just a random pile of crypto they're sitting on. It's the foundation of a massive structural pivot in their entire business model. Management isn't just playing the game, they are trying to own the board. They've officially dubbed this mission, the alchemy of 5%. Their stated goal? To acquire and hold 5% of the total global circulating supply of Ethereum. Think about the gravity of that statement. They are pivoting away from the old-school, hardware-heavy and capital-intensive mining model, where you're constantly fighting rising electricity costs and GPU depreciation, and moving toward a high-margin, capital-light treasury engine. They've already secured 3.5% of the total supply. That transformed BMNR from a mere mining company into a flexible, asset-backed powerhouse that essentially functions as an Ethereum ETF on steroids. By shifting the focus from mining to accumulating, they've removed the massive overhead of traditional operations. Now, usually, this kind of aggressive growth and massive accumulation requires a company to take on mountain-sized piles of high-interest debt that could crush them in a downturn. But if we dig deeper into the actual numbers, the fortress label starts to make perfect sense. This is where the financial fortress label comes from, and it's the part that should make every value investor sit up a little straighter. While most tech and crypto firms are currently drowning in leverage, struggling to pay off loans in a high-interest rate environment, BMNR has managed to maintain virtually zero debt. We are looking at a balance sheet with nearly $900 million in cash and equivalents. Compare that to a tiny, almost negligible $1.8 million in total debt. That $4.8 billion loss we talked about earlier? It's an accounting mirage, a paper adjustment, not an operational cash crisis. Their solvency ratio is, quite frankly, pristine. They have the dry powder to survive any crypto winter and the firepower to expand during a crypto summer. But having a massive pile of assets is one thing. Making those assets actually generate a paycheck while you wait for the price to go up? That is where the real growth engine kicks in. BMNR isn't just a HODL play. They aren't just sitting on their hands waiting for Ethereum to hit a new all-time high. They are a yield machine. They've already staked 2 million Ethereum, roughly half of their entire holdings, to the network. This isn't just for security, it's to generate an estimated $180 to $400 million in annual recurring revenue. Let that sink in. That is approximately $1 million a day in high-margin, passive yield. They are getting paid to own the future of finance. And while those numbers are already staggering, there is a hidden catalyst that the market hasn't even begun to price in yet: the 2026 launch of their own proprietary validator network, Maven. This move will allow them to internalize their entire infrastructure, cutting out third-party fees and sending their profit margins even higher. So, with $1 billion in cash, a fortress balance sheet, and $1 million a day in yield, you have to ask yourself, what is this actually worth to you as an investor today? Here is the big payoff. The reason for this being a missed opportunity for the masses. Because of the market's confusion over those GAAP losses, BMNR is currently trading at an irrational discount. It's trading at roughly 0.93x its net asset value. In simple terms, you are essentially buying Ethereum at a 7% discount to the actual spot price. You are getting paid to take the exposure, but it gets even better. At this current valuation, the market is essentially valuing the rest of the company at zero. That means you are getting their strategic moonshots, like their $200 million stake in Mr. Beast's Beast Industries, effectively for free. You're buying a massive Ethereum treasury at a discount and getting a piece of the world's biggest creator economy brand as a free bonus. Now, none of this matters if we don't look at the risks with a sober eye, because there is one specific metric that changes the entire math and explains the underlying cause for the price action being so volatile recently. We have to talk about the dilution. To build this massive Ethereum treasury so quickly, BMNR had to raise capital, and they did it by increasing their share count by over 1,000% year over year. That is a serious headwind for shareholders as it dilutes your piece of the pie. Technically speaking, the price action right now is nasty. We are trading below key moving averages, and the bears are currently in control of the chart. However, if you look under the hood, the tide might be turning. Short interest has dropped significantly, suggesting that the big bets against the company are being covered. Furthermore, the analyst consensus remains a strong buy, with an average price target of $48.67. From where we are sitting today, that represents massive, triple-digit upside. So, the question remains, is this a dilution trap that will keep sliding, or is it a generational opportunity to buy the dip? The final verdict? BMNR is a strong buy. It is arguably the most aggressive equity vehicle for Ethereum exposure on the market today, but it's a calculated bet, not a blind one. For this investment to truly explode, two conditions must be met. First, the price of Ethereum must hold its macro support at $2,750, which it is maintaining very well. Second, management must show discipline from here on out, only issuing new shares when the stock trades at or above its net asset value to protect investors. If you believe that Ethereum is the fundamental financial infrastructure of the future, BMNR is the coiled spring you've been looking for. It is the MicroStrategy of Ethereum, hidden behind a mask of accounting confusion. Don't let the headlines scare you away from the math. If you found this deep dive helpful, hit that like button and subscribe for more institutional-grade breakdowns. But I want to hear from you. Is the 5% supply goal a stroke of genius or an impossible dream? Drop your thoughts in the comments below.
Alright, that's the update. If you want more quick fact-based insight like this, subscribe and tap the bell icon so you don't miss the next one. Drop your thoughts in the comments, and I'll see you in the next update on Smart Stock Sam.